Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Tesla report for Wednesday, May 3rd, 2023. Before we click through all the charts, please click like if you would each and every time you watch the Tesla report. It helps us out a great deal in being found on YouTube. Also, consider subscribing to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded for your viewing. That includes the Tesla and Apple report that come out each and every day. And if you would, check out wickedstocks.com. We offer a very reasonably priced subscription package that offers a full array of daily and weekly analysis, daily Triple Q, daily SPY report, 2 individual stock picks every week, all in video format, as well as weekly video analysis in the S&P 500, the NASDAQ 100, and the long bond ETF, the TLT. We also offer a 5-day trial. So your credit card is not transacted until the end of the 5th day. So you have time. If you don't like it, you can bail. No questions asked. Anyway, this is a weekly bar chart for Tesla. Just a reminder, there are overhead resistance areas, ceilings of resistance that are significant in the upper 190s midterm, in the 220s long term. We do need to get up and over 220.62 and dropping weekly for Tesla to look strong through the rest of the year and perhaps even into next. Until then, we are in a pretty well-defined channel structure that may well contain buying through the rest of the year, and below which selling pressures can build as we move into later year. Now, we don't have a sign for follow-through selling unless we close over the next few days below this narrowing zone of support between 146.06 and 152.08. This 152.08 channel bottom, as you know, was a target from about a month ago when we closed below this rising channel bottom that is presently in the low 200 area. We completed that target in about 2 to 3 weeks and have come off of it modestly, holding above 152.08. Will keep the channel top that is presently, where are you, at 200.56 roughly, 198 and change on the weekly chart. This area, 200.56, is considered, I think, a realistic 3 to 5 week objective. So, as I've been saying, as we fell into the low 150s last week, that any out of the money puts you bought on that trade, 155, 145 out of the money puts, may well have been liquidated, should have been liquidated, and in turn, you can reach for the 200 out of the money calls that don't expire for at least a couple of months, I would say. That is still the big picture play. Now, of course, if we settle today below 146.06, then just the opposite. This market continues to unravel into the very low 100s, full channel extension. Pretty reliable targeting mechanism for a very well-defined channel that we have presently at 152.08. That would be expected within about 3 to 5 weeks, which lines up well right now with that January pullback low of 101.98. That would be the next big picture objective. So, if we were to close below 146.06, you could reach for the 101 out of the money puts that don't expire for at least a couple of months. Until then, this is a zone of support that can contain selling through May into June, and above which the low 200s anticipated over the next 3 to 5 weeks. Let's take a look at the upside for today. I've got minor points. So now we're talking the day itself, and I've got 166.37. That is this descending channel top. Can contain intraday buying pressures. Below which 159.32 in close reach. I don't have 159.32 drawn, but it is simple channel structure, horizontal channel structure over the last 3 days across these tops and against the intermediate low. It is a downward pivot point today. So if we break or open below 159.32, we can retest this 152.08 channel bottom. Preceded, yes, by 152.67, but I eliminated that. I don't like bunching these numbers up too close together. I like to leave them several points apart generally for day trading purposes. So if we break or open below 159.32, the day trade shifts negative, expecting 152.08, where the day trade, if it's a short position, if you bought, say, 152 out of the money puts that are short-term expiration based on a violation of 159.32. You can take profits there. Also, if we test 152.08 once again, you could reach for 168 or 170 out of the money calls that don't expire for at least a week, because above 152.08, I'm still anticipating this 170.48 descending speed line, which could contain buying through next week. In fact, let's talk upside now. If we happen to push or open above this 166.37 channel top, then yes, 170.48 is likely today, where we can place a weekly high, and from there fall back to 152.08 by the end of next week or sooner. Now, as I mentioned earlier, holding above 152.08 does maintain a 3 to 5 week upside objective at the 200.56 channel top. And if we settle today above 170.48, we should within about 2 to 3 weeks reach the 200.56 area, which is the significant overhead resistance that can contain longer term buying pressures. But for the day trade, it's two-sided between 159.32 and 166.37. And if we violate either point, we have meaningful intraday continuation in the respective direction. Breaking 159.32, day traders are playing the short side down to 152.08, where long entry can be made not only for the day, but through the rest of the week and even through all of May. Upside today, pushing or opening above 166.37, signals 170.48, where if you went long above 166.37, profits can be taken. You can also play the short side as we move through the rest of the week and into next. At the 170.48 mark, you could reach for 152 out of the money puts that don't expire for at least a week or two. And last thing I'll say about 170.48 is if we close above 170.48, any puts you may have bought at the 152 area should be liquidated, and you could then in turn reverse and reach for those 200 out of the money calls that don't expire for at least 3 weeks. You might go a month out on that. Now, as far as the day trade goes, below 152.08, I think if we break 152.08, 146.06 is in reach today. This is still a range. Even if we close below 152.08, we actually came close to doing so last week. We opened below it the following day. Even if we close below it, yes, that does not look good. So what do I have to say about that? If we close below 152.08, but not below 146.06, and you bought those 170 out of the money calls, you may consider liquidating those based on that information alone. You shouldn't take much of a loss on that, because after all, you're buying those 170 out of the money calls with a week to go to expiration, for instance. Only once we're testing 152.08. So if we close below 152.08, but not below 146.06, you should probably liquidate those calls. It's up to you entirely, but you're just sort of safeguarding the possibility that we continue south the following day, close then below 146.06, and then we're on our way to bearish continuation into the very low 100s. Trying to think if there's anything else to say. I really don't think so. I've covered it all. I'll leave you with this chart. It's the most appropriate for the day. I'll be back tomorrow with Thursday's Tesla report. Please click like, subscribe, and check out wickedstocks.com. You have a great day.